Hello, ladies and gentlemen. It's our Wednesday financial show on Pod TV. My name is Sasha Starr, and today's guests are Dr. Milan Somberg. Welcome to the show.
Thank you for inviting me. Delighted to be here.
Jim Ida from Ida Foundation. Welcome to the show, Jim.
Thank you for having me, Sasha.
And founder of the network, Nick Palivida. Welcome to the show, Nick.
Hey, Sasha. How you doing?
Okay, great. So the market is continued its upside movement. I think that this is going to last for a very, very long time. I'd say maybe 12, maybe even 15 years.
Wow. Talk about the bull in the China closet.
That's right.
On Pod TV.
But
Lasts
there
for
will be
15
fluctuation.
years.
There will be
Whoa.
At first, it will be quite slow, similar to what is happening right now. Nothing spectacular, but market is now awaiting until Fed will recognize that it cannot longer and should not any longer raise interest rates. The day is coming, whether it's going to be this month or next month or two, but it's coming. It's inevitable. Now, once that will be in place, they will sometime, maybe 3, 4 months, 6 months, they will start lower interest rates. So with the lower interest rates, all picture will change. All the tech companies that are awash with cash and they are not paying any significant dividends. A lot of them don't pay any dividends at all. NVIDIA's dividend is 0.06%. So it's negligible, right?
You know what the Berkshire Hathaway dividend used to be over 50 years?
No.
No idea.
The Berkshire Hathaway has given out in dividends 0%.
All growth.
So the only reason to hold their stock is to
Upside.
Upside.
Yeah, capital gains.
Maybe, but you see, the problem is that you can't sell it because if you are amassing for 50 years this stock and it's cost hundreds of thousands of dollars a share, you cannot sell it without consequences. So you will put it in your will to your kids and grandchildren. That's a good story, actually. So you yourself will never, ever benefit from stock like this.
Why can you not sell it, Sasha? Why can you not sell it?
There's always a buyer.
I used to own it for...
Just capital gains. Taxes.
How much more paying capital gains?
If you make money, you better be prepared to pay taxes. The best thing you can do with taxes is delay them.
One of the things I wanted when I started investing is to have a tax problem. That means it was making money.
Yeah, that's right. Yeah.
You know, you don't have a tax problem if you don't make money. So
Good point.
The dividends, they have different tax treatment than capital gain tax. So if you're getting stock which is paying steady and ever increasing dividends, that's a different story. You can reinvest them, you pay much less tax on it, and you can just simply withdraw. And what I did, I put some money out of my, actually I didn't withdraw any money, I just took dividends and put them into my fund portfolio. That's
Warren Buffett said that in over 60 years of investing, he has never known a good deal to be ignored because of the tax consequences. Never known a good deal to be ignored because of the tax consequences.
Oh, by the way, I would like to tell you something. I got finally, following our discussions, I bought a couple of hundred shares of SPY.
good for you.
Also, I sold.
Yeah, congratulations.
Well, listen, you always want to try something new, improve something what you're doing. I still hate myself for doing that, but you never learn anything if you don't actually experience it. So once you experience it, you know a little bit better what you're talking about. So I decided, okay, of course, instead of buying Nvidia, Microsoft, and a few other selected group of stocks, you're buying the ballast stocks. You're buying by buying S&P 500. You're buying stocks like Walgreen, for example. It's a horrible stock which was paying some dividends. It's still paying these dividends. And by the way, I, I have it in my core portfolio, believe it or not. And because of the dividends, I am not selling it, although I should have, but I still hold it. But we'll see.
Sasha, our followers should know about SPIVA. That stands to Standard & Poor's 500 versus active investing. And so people who buy the Standard & Poor 500, such as you did by buying SPY, have over a course of time outperformed over 95% of professional managers over many, many years. And that's likely to remain that way. And so you have had great success by being a momentum investor because the trend is your friend until it isn't. And most people are not Sasha stars. And 40% is by how much they lag the S&P 500. And we can teach a high school student how to follow the S&P 500 in about 15 minutes.
But listen, what you're saying is that someone is right and someone is wrong.
Yes.
And therefore, this wrong person is definitely me. And all the rest of the people who are buying S&P 500 day and night and every week and every month, they are on the right. So I'm the only one who is going across the sort of the trend, so to speak, or so on. But I just don't see it that way. What I'm asking, okay, NVIDIA is going to have earnings report on May 26th. Obviously, even if they will have the most horrible report, but on the way to that report, the stock will go higher and higher and higher. Now, NVIDIA is part of S&P 500. So if I will buy S&P 500, I will have NVIDIA as well. And when NVIDIA will report, so all S&P 500 will go somewhat higher, led by NVIDIA. But that NVIDIA has to tag along other 499 stocks. Why do I need them? I want to learn from you. Please explain it.
Well, the reason you need them is because the history shows that buying an exchange-traded fund which tracks the S&P 500 has outperformed professional investors over 95% of the time.
Okay, so if I was ignorant and I didn't know that, I would buy NVIDIA alone. That would make probably 50, maybe 100% profit. But because I'm a learned investor, and I read Warren Buffett and other brilliant minds and so on, I said, no way, I'm not going to buy NVIDIA. I will buy S&P 500. That's how I'm going to make my money.
Most investors like myself have been able to pick successful stocks with hindsight only. Because for every NVIDIA, there is Nortel.
As I say every week,
There's an Enron, an MCI WorldCom.
yeah, you're both right,
You know?
and I say that every week because it's true. It depends on what you want to accomplish as an investor, and if your goals are marginal, you'd want to increase your portfolio over time. Then Milan is telling you how to do it, and if your goals are to make more money than the average investor or the person who invests money in an S&P, for example, in an index fund, which is a wise course of action for many people to take. I don't criticize it. But if you have higher goals, then listen to what Sasha is saying, because you're both right. Your approach, but if you're going to do what Sasha does, then you better have time to put into it, and you better have some discipline and some courage. And if you make a wrong guess, don't let it discourage you. You have to be tough to be a solid investor.
Jim, thank you. By the way, you've picked up the one thing last program when you mentioned that almost all my positions are hedged. And by the way, it's correct. For example, let's see a day like today. Okay, in the morning the futures are down. The Nvidia is down. I think two and a half.
Yeah, just a little bit. Yeah,
$3 and all that stuff. Guess what?
it's up a couple points now.
Nvidia. So this covered calls, and there are tremendous premium. And actually, I must admit, with all my hindsight and my talents or so on, I'm making most of my money on options, not on stocks.
Yeah, right.
Most of them on Nvidia. I figured out, okay, so I sold my covered calls, and that my cushion, that what protects me from some unforeseen negative sentiment in the market. The people are selling and so on. That's fine, because this calls will expire worthless. I keep my premium and I will sell next covered calls. However, now I will reduce probably a number of covered calls simply because of the upcoming report in May. So I would like to keep, maybe half of my position will be hedged and half not.
Well, Sasha, I wanted to get back to what you said about a long-term market, a rosy scenario for the market, because what I've been noticing is that many more people are paying attention to the earnings reports.
Mm-hmm.
That you've been stressing that you spend a lot of time waiting for a company to report its earnings. And
Yes.
I'm thinking the market at large is gotten off of the inflation. What is the Fed going to do about inflation? And they're now really narrowing in on quarterly reports of companies, and the stocks are fluctuating based on that. And
But that's the most important factor of all stocks that you are following. The most important factor is date of earnings, expectations, and the actual report. But by actual report time, I sold either all my position or at least half, never less than half position.
And you don't wait for you take action before the report is issued.
Absolutely. Absolutely. That's what I did with Goldman Sachs. On Monday, a day before the report, I sold all my positions. I made very nice profit, running from 315 to 339 or so. It was wonderful move. And then what I did, but I still wanted to have some upside available. So I sold 225 puts just in case. Most likely I will not be exercising these puts. They will be worthless. So it will add even more cash to my account. And if I will be exercised, I don't mind to have 225, and I got premium $9. So it's.
But if you just bought and held Goldman Sachs stock, that earnings report was probably disappointing to you.
To those truths, I don't understand why. It would have been disappointment only because the stock went down. Although it recovered,
that's my point.
During next day, it recovered at least half of its losses or so on.
But
it's not so different. But
your
but
approach
for
is
me,
protecting you even against when the earnings report disappoints and the stock goes down. You're still protected.
Oh, I'm protected by selling covered calls because I had several hundred shares with half of the position was hedged. So I sold all my position by the end of the day on Monday. And then Tuesday, when stock went down, I sold this 225 puts.
Sasha, how much time do you spend managing your portfolios?
I wish I could spend more, but
Okay, you enjoy it.
I still say, I would say, honestly, I'd say a couple of hours a day. That's the time I spend.
Yeah,
But I'm not following the market really while the stock is trading back and forth. There's nothing really to watch. But what's interesting is that you're reading some publications, you're following each company that you are following, is when their quarterly reports, what are the expectations, what's the analysts. I don't really read. I see only synopsis of how many analysts are to hold, to buy, to strong buy, or so on. So that sometimes I'm looking at, but it's meaningless.
It depends also who the analysts are. If they work for a bank, they cannot be objective.
No, I don't care.
Morningstar analysts are absolutely objective. They're in nobody's pocket. to
Don't
subscribe.
buy what they're saying,
No,
selling
I
you.
don't care at all unless I would write their biographies. There's no reason for me to learn who they are and what they think. All I need is numbers. Let's see if 51 sees a company as a strong buy, 10% as a buy, 20% as a hold, or so on. I'm looking only at numbers. I don't really care who they are, what's their names, how many children they have, or so on. Absolutely don't.
Well, Milan, if I can answer your question in a different way, I spent time in looking at global phenomena because it's a global economy now and it
Yeah,
affects
right.
the US market that way. And so a lot of the time that I'm spending investing in that, is going to dictate what I think is going to happen in the future. And it's going to dictate where my investments go. And we're talking about my fund portfolio, not my core portfolio,
Right.
which I don't touch.
That's important.
But the fund portfolio, I think, in terms of like we had a global pandemic. Our global distribution system broke down, so that led to scarcity. Scarcity leads to prices going up. We call that inflation. And then we saw the Fed try to deal with this by looking at job numbers. It was crazy to me because the prices went up, inflation went up because the distribution system broke down. So the jobs, whether or not we have more jobs, I think more jobs are a good sign for the economy, but they were raising their interest rates whenever we reported good job numbers. And it was nuts to me. So the fact that they might be tailing off and stopping this crazy idea of racketing up the interest rates, when what we need is some company, a new company to form and say, lend me some money so I can solve this distribution problem. That's what makes America great. The American company's great. There's always somebody that's going to solve the problem that we have. And the problem was the distribution system. So loan them the money to go out and solve it. If eggs are too expensive, somebody will solve it. Just lend them the money.
If you're looking at global phenomena in order to guide your investments, one of the great things about that approach is you're learning more about what's happening globally than almost any other way.
It's
You
a
learn,
byproduct.
you
Absolutely.
learn a great deal, and so that's definitely worth the time. Also,
And I'm interested in what's going on in Ukraine. I'm interested in what's going on in Morocco.
exactly, yeah. And
It doesn't matter to me.
Yeah, mhm.
Yeah, if it's going to have an effect on the global economy, I'm interested.
Of course, yeah.
Yeah. Well, what does the panel think of this? A couple of years ago, there was this big thing dealing with, I think they call it cryptocurrency.
Yes.
And we ended to basically stay away from cryptocurrency. Cryptocurrency had a lot of hype, and correctly so, that we stayed away from it because it was just a lot of hype. But now I'm hearing another group of companies that are having a lot of hype. I don't even see it. It's called the artificial intelligence companies. Okay. And the minute you hear a lot of this hype, there's opportunities to make money if you get in early on, but there's opportunities to lose a lot of money if you stay in too long. Are artificial intelligence being hyped now similar to cryptocurrency by Wall Street? Anyway, that's my question to the panel.
Great question.
That's because I only come up with great questions.
Yeah,
Neat.
something interesting was published in the Wall Street Journal just a couple of days ago. Artificial intelligence is able to write an essay without a single punctuation error or a grammatical error. They're able to compose music to equal what Mozart did. Artificial intelligence has not been able to beat SPY. Wall Street Journal reported that a couple of days ago. So there you go.
Yes, I'd like to mention something. Nobody can beat SPI. We know all that. There is no stocks, there is no investors, there is no fund manager. No one in the world, even God himself, cannot beat SPNY. I agree with that. But about artificial intelligence, I started to accumulate a while ago, just probably a month and a half ago, stock by the name Utility Software. The symbol is U, one letter. And I was quite happy. I started to build my position. Started with 500 shares, and I bought another 1,000 shares. I was selling covered calls to it, so I manage it. Right now, I'm in a significant plus, and I still hold this position. However, I was looking at other options as well, and I found the stock by the name, of course, AI, artificial intelligence itself, symbol AI. So I started to look at that stock. And here it is. It went sharply up from $15, $20 and went up to $33. And all in one day, when I was started to look at it, maybe to buy some shares, all of a sudden it collapsed in one day back to $20. Now, what's happened is that a group of short sellers wrote a letter to Security Exchange Commissions that there are some misappropriations in the company and some mess with financial statements, and they report on them or so on. So, of course, stock collapsed to $20. Okay, they sit on 22, 21. So now, yesterday, I started to accumulate. It started very, very minor ways, about 500 shares, short cover calls. So I would like to see if there will be any weakness. I will buy more shares. If it will continue higher, then I know that I'm on the right track and I already making money, so I can buy even twice as many shares as I did before. We'll see which way it will go, but yeah, I have some exposure, very, very small, but anyway, nevertheless, I do have exposure to artificial intelligence. I don't believe in the concept, period. It's a complete fantasy. But the companies are real, they're having revenue and so on, because like that is far away. I mean, in my lifetime and even my daughter's lifetime, we're not going to see any impact. But there are some areas where it's quite useful, and therefore these companies exist and they're doing fine.
Yeah.
And not
My rule of thumb and things like this, and the questions that Nick asked, is that if I hear about it, it's too late to invest in it.
no, disagree. It's
Oh,
just
exactly. Yeah, but we should buy on rumor, sell on news. By
Yes.
the time it's news, you should be selling. The
Yeah.
knowledgeable people who bought on rumor are selling.
Well, most of the time, people are looking at a track record of success, and that means they're looking at a track record of success, and that might be all the people that got in at a certain point. They were successful, but that doesn't mean it's going to continue. That means you buy in at a high level. That's a recipe for disaster, in my opinion, my experience.
Jim. Sorry,
Not
sorry.
low, but
Disagree with you. Disagree with you.
okay. Tell me why though, because I've
They-
got a long history of this.
Take my recent example of Lululemon, when stock in one day went from 320 to 360. So now 360 is too late to get in. Oh, that's the end of story. So what's going to happen now?
No, but Lululemon's not a startup. It's not a rumor. Lululemon's an established company. That's different.
But wait a sec. What do you mean rumor? Do you think that this utility software or artificial intelligence are rumors? They're
Well,
real?
yeah, I think that what Nick is talking about is that everybody's getting on board with artificial intelligence. So now it's like
Wait a sec.
everybody's
But
piling
Jim,
on.
wait a sec. You cannot buy artificial intelligence per se. You're buying companies,
Yeah.
shares, which is involved. So you can analyze the company. You don't care about artificial intelligence.
Okay, now we're in agreement again. I
Okay.
agree.
Now we are coming down. We're looking, first of all, is a company has revenue?
A
Or
good
it's
company
their
with revenue, yes.
It has revenue, doesn't have any patents, doesn't have intellectual
Yes.
property, or so on. So you can see it's all an open book. There is no look, Milan. You believe in some kind of hindsight that helps you to select stock? No, it's all an open book in our internet age.
Sasha, I live in Silicon Valley, where if you had in the 90s, if you had .com in your proposal,
Yeah,
your
exactly.
business report, everybody gave you money. People were
Right.
falling over to give you money.
Yeah.
So this is my point. Nothing further. Analyzing individual companies, absolutely. But when you look at an investment, a company that's in its startup stage, and it has .com after it in the 90s, or
I remember.
AI after it now, all my spider sense is tingling.
You know,
No, I remember this time, and it's not very different from Canadian mining company stories that somebody. I even know I had a person. He passed away several years ago, and he was very successful investor in particularly mining company. Actually, the funny thing is he acquired control of one mining company near in Toronto area. So the first day he went to visit office of that company. He asked immediately to sell all mining equipment, all furniture, fire everybody. So that's the first thing what he's done. So he asked him how you going to produce any gold without mining equipment. He says, I don't need to produce any gold. All I need is to sell shares. That's it. I don't care about that gold. Keep
Got a
your
point.
gold. So, and he did very well. He sold most of his shares at $6 a share, and next day stock collapsed to 22 cents or
Yeah.
so. So he's done
Yeah,
well.
see, there should be laws against doing that, but
No, but he was fantastic manipulator. Actually, I
Right.
learned from him. I was at his house, and he had a call from Australia to ask him about his opinion about certain mining venture or some kind of penny stock. I don't know even what was that. And you know how he started? He started with, "Oh, have you? Are you aware of that on New York Stock Exchange there is only one company that has a single letter?" "Oh no, I never heard." "Yes, and you know what is this
Ford?
letter? It's a letter N, and you know what it stands for? It stands for Inca. The huge mining giant Inca has symbol N." "Oh my God! Oh, I didn't know. Thank you so much," or so. So now he's saying, so here is a company which is part of Inca Holdings. It's held by one of its directors, or his son, or something, or maybe his relative, or maybe nobody. Who cares about who holds that garbage? So they have a license to develop gold properties right next to Inca, and it will be gold, nickel, probably silver, and maybe some bunch of other metals. Oh, I see. So if you want to invest, I have about day and a half left for the pre-IPO price. Then I will allocate some shares. I can allocate very small amount, maybe 10,000 shares, say at $2 a share, and that's about it. No, I want more. I want to. Well, if you want more, I have to ask somebody. So he would provide his shares. Of course, he wants premium, so it's not going to be. So this shares will be at $2. But whatever I will accumulate from the friend of mine, it could be 250, maybe 275 or so. Oh, okay, I'm prepared to pay all that. Okay, so tell me how much money you want to buy shares for, and I will arrange it for you. Next day, he bought shares for about $150,000. It's just one person from Australia, from nowhere. But strange things are happening in this market. So the more you know, the better you can deal with the situation as it arises.
So Jim, you don't like the idea of buying stocks that are costlier than they were yesterday, that is at higher prices. And so what we're talking about here is momentum investing, which I think Sasha does. And momentum investing, peer-reviewed publications show that yes, momentum investing works because the trend is your friend until it isn't. So you have to monitor it very closely. And so, one of the benefits of owning SPY, which tracks the S&P 500, is you have to give it 15 minutes a week. Sometimes 15 minutes a month does the job. Whereas momentum investing requires constant attention. So if you like that, and many people do, welcome to do that. Carry on, because that can be exciting and it can be entertaining.
Yeah, investor know thyself. That's the only advice. Yeah, if you know yourself and you know what kind of investor you are and want to be, train yourself to be that kind of investor, then all bets are off. You can do whatever you want. And I think that as long as you're disciplined, as long as you have a set of rules, Sasha follows rules.
I have difficulties in one respect, is that we're talking about fund portfolio and core portfolio.
Yeah, right, yeah.
And I told you that I have a core portfolio that I don't touch. I never write options. I don't do any tradings, anything.
This is all discretionary money that we're talking about now.
Yeah, it's my discretionary money, and I don't touch. I get dividends, high yield dividends paying stocks. I do have that. And as a result of that, I don't do them. Actually, It drives me crazy, and I'm fighting almost every week or every month to cash some of that and put it into fund portfolio, which is much more successful than this garbage. But so far, I keep my discipline. So, Milan, everything what you're talking about S&P 500, I agree with you for a core portfolio. But how you can convince people to do the same thing for a fund portfolio?
Yeah, let me tell you about what I looked at recently. I don't have a fund portfolio anymore because the core portfolio is doing okay. If history shows that owning the American market by having an exchange traded fund which tracks the S&P 500 has generated a little over 6% inflation adjusted for nearly 200 years. And I'm quite happy with having a little over 6% inflation adjusted. And if you want to do better than that in your fund portfolio, I recently looked at a stock called EDAP. And I looked to see what Morningstar analysts, these are objective analysts, have to say about EDAP, which is currently trading at about $10. And analysts, 0 analysts are saying sell, 0 Morningstar analysts are saying hold, and 3 are saying buy. So buying it, now they have price targets for 12 months. And the high price target is $16 for this stock. It's trading now at about 10. $16 is the high price target over a year. The average price target is $14 for a stock which is trading at 10. And the low one is $14. The average is 14.62, and the low is $14. Low is $14. Star analyst for this stock, which is now trading at 10. That alone warrants looking into this stock at a greater.
But Milan, you didn't tell me something that I always look at first. What do they do?
Oh, okay.
In other words, before I look at a stock, I want to know
what do they do?
Is your
they
business?
are actually a global leader in therapeutic ultrasonics, and today at 3 o'clock, they will have a live surgical procedure that
I'm
people
good with that.
by following www.focalone.com.
Okay.
F-O-C.
I'm into healthcare because healthcare in the United States expensive and doesn't look like it's going to go down.
Well,
So EDAP certainly would be something that I would entertain because they're in the healthcare sector,
exactly,
which is about 20% of our GDP.
Exactly.
21% of our
At
GDP.
3 o'clock today, you'll be able to watch a live procedure being performed on a prostate cancer by following www.focalone.com at 3 p.m. today. And Eastern.
Okay. Do you know what their financial statement? See, I hate to dig, but I would dig before I invest. What is their income, revenue, and expense?
Nick, I haven't had a chance to look at that. All I looked at today is I knew that Sasha was going to ask me what people have in their fund portfolio. So EDAP looks interesting based on what Morningstar analysts are saying.
Right.
So that's
the devil's in the details. See, some of the ones I get into trouble with is I don't look deep enough in the financial statements, and a lot of them you go in there and you find loans to shareholders. They have debt $4 million to shareholders. They have with an 8% note. Another one had a debt $600,000 to shareholders. In other words, there's some internal stuff that really is problematic once you get into it, even though somebody makes a recommendation. So I like to really look at their certified statements, in other words, their balance sheet, their income statement, and you do the best you can because you know there's the potential for fraud and abuse.
Oh yeah, Morningstar pretty good about looking into that kind of stuff.
But we're taking an analyst opinion of it as opposed to actually looking at the numbers. I'd like to see the numbers on that.
Excuse me,
before I put some money into it.
You're looking all of the wrong picture. The major thing is the daily volume of the trading.
Yes,
This is the most important.
Daily volume. I'm buying a company.
Volume. Where is the volume? There are 5-6 people who are interested in that stock and selling.
Sasha, you're buying it for a trade. I'm buying it to stick in my portfolio and go to Spain and Morocco and go on vacation. So
Yeah.
Yeah,
Okay, you're going at it so that you can trade it, make a quick
Well,
profit, and move on.
No,
Okay,
I mean,
understand.
the
We have
volume
different
is not
objectives.
for, no, the volume is not for trading purposes. The volume is to show interest of the
Yeah.
public in that stock. If there is no volume, there is no interest. So there
Right.
has to be
Now,
to trigger
Well, I understand that.
serial of events
Volume is a good
start
indicator.
increasing interest
Yeah.
of the stock.
Yeah,
I-
well, yeah, but the thing is, see, I'm more interested in profits than whether or not other people are looking at it.
But
But the
Okay?
profits are impossible without volume. Nick,
you're
No
into-
volume.
Well, it's not shareholders buying or selling. It's that company making money.
Yeah,
You
you
know
guys
what?
are both
The
making
companies
good
make money
points.
happy.
Yeah.
Volume is important, and
Well,
revenue.
yeah,
is
no,
great.
volume is important so you can get in and out. I got that.
Yeah.
All right.
And also this company that Milan has told us about, you
I
know,
need
like,
to look at it now.
I'm already
killing
concerned
me.
with it because I've heard about it and I must be too late. But it's a fascinating industry, ultrasound biopsy, and it's just gotten approval in Japan to be used. So that's the kind of thing that's a global type of occurrence that makes me interested. You know,
Yeah.
Japan is
You
not
can,
like
you can scale it.
some kind of
Yeah.
throwaway country where you don't care. I mean, that's big time. They're in the big leagues. They've gotten approval to use this procedure.
Yeah.
So if it gets approved in the United States, and who knows how big this company can be. But its 6-month track record is good. It's going up. It was selling around 8. Now it's almost 11. This is the kind of stock that, just based on what I'm hearing and based on what I see, of course, as Nick points out, it requires further analysis. But you also, all the signs that I'm seeing are interesting. It's all interesting. But one of the things that I pay attention to is when a good company falls out of favor. Because usually when a company is a startup and going in becoming famous, and I'm too late. I haven't gotten in time, but I can always get in when a company is battered down. Like Taiwan Semiconductor is one of the ones I talked about, and NVIDIA was another one. Good companies that got battered because everybody was selling semiconductor firms. And so when it's sour in a sector, that's when my interest gets peaked. But this is as Nick points out, healthcare is not going away. This is a sound kind of business to get into, and it looks like a company worth it looking into.
I'm just looking at the financials now. It's overpriced. Okay, go look at the revenues in 2022. 15,072,720,000. Okay, that's cool. 15 million's cool. But now you go look at the market value, 393 million. You cannot be serious. They don't show the PE ratios.
That's
but
what
it's
I wanted.
Way out of
That's my next
proportion.
question.
If you're looking
Way
at
out of proportion. I mean, I just go there, and remember, you have a lot of deals to look at before you say yes. And so just those two factors, I'm out. I'm going like your PE, you're overpriced.
Your PE was what, Nick? I didn't get.
Well, they didn't calculate the PE ratios, but go ahead. Hey, come on, Jim. If you have a company that has 15 million revenue and you value it at 390 million,
It's overvalued.
It's way overvalued.
Yeah.
Which means the stockholder who bought it at 10 is just basically overpaying for that particular company. And remember, it's not to say that it can come out of its shell and be wonderful. But remember, you got 4,000 looks at the basket, and if you find one thing wrong, you go to the next
The only thing
one.
I'd say, because that's good analysis,
I'm out,
Nick, the only thing I would say to take the contrarian view is that it's coming into market with a technology that just got approved in Japan, for example. So it's a technology that wouldn't have been in use, generating all that revenue. So if it does get this approval and starts generating more revenue,
I hear a lot of ifs.
low.
and
I hear a lot of ifs, dude.
I understand your point.
I hear a lot of ifs.
I understand your point,
Are you trying
but
to sell me that company?
this is an emerging technology. This is not the kind of thing where you take that old analysis, which you would do for a stable company. Emerging companies you have to take a different look at them. And it's not based on the news. This is not based on some.
Hey! Drop the PE ratio, and I'm in. It's just
I got you. I got you.
The Tesla was 1,000 times on PE. We said people to stay away from it. The ones that smart did, and then Tesla tanked, which rightfully so, because ultimately you regress to the mean. Okay, this stock you might do well at, but the thing is, you're not an odds-on favor when you have when it's blown that far out of proportion, and so like if you're coming, I'm passing it on already just on that metric.
Yeah.
You want to look at financial statements, Nick. You want to
I look at a lot of financial statements.
Now,
I mean, I
interesting
do it
that
every,
there isn't a single
every
line.
day.
There isn't a single line in your financial statements which cannot be altered legally, except the top line. So the first thing they start doing is creative engineering, creative reporting, and then when they start getting into trouble, they start lying about their top line too. So that makes financial.
Okay, but why would you lie about a revenue of 15 million? And show me what company on this planet is worth 300 million, has 15 million in revenue.
Well, what was its revenue in 2021?
It doesn't say.
Okay,
I'm
so
just looking at
That's
this.
a good question.
I'm just looking at the snapshot.
Yeah.
that's the kind of track record I want to look at. I want to look at some.
Yeah, you're buying future income.
Yeah, well, I'm not buying it yet, Nick. I didn't say.
No, I wouldn't buy it.
I would say it was worth
I
looking
would
at.
like to point you to something. It's very difficult to
Sasha would
discuss
trade it.
if the stock is good or not so good without comparison. You have to always compare something to something. So let's see if you compare that stock. Let's see you have, say, $50,000 lying somewhere, doing nothing, and you decide, okay, what the hell? I'd like to buy some stock. So let's see your choice is this company and, for example, NVIDIA. Which
Let's go
stock
look
of
at
these
NVIDIA.
two would you buy with your own money?
Good question. Let's go look at NVIDIA.
But to go back
I
to the
traded
analysis
NVIDIA
of
a long
price
time ago.
earnings, once you get approved by a country like Japan, your earnings are going to go up.
When?
Bottom line.
When? Jim, when? Okay, it's approved now. So they have to prepare the equipment to be sold and adopted and used. And then a year later, so we are looking at least 2 years before that announcement will materialize into something. And in first year or two, it will be close to.
I don't know how I got in defending this company because I have no experience with this company. However, what I'm saying is I'm arguing against your arguments about a company in this situation where it's got a process, a new technology that happens to be very interesting.
And also, you can't compare it to anything else because the only ones who have
It's new. It's brand new. It's ultrasound biopsy. Can you imagine how much better that would be? And ultrasounds, the surgery, the which we're going to look back on this day and think of the barbaric.
It's definitely a fun portfolio deal because you're buying what is you're saying potential explosive growth. By the way, even look at NVIDIA is overpriced. 159 PE ratio. Come on. You may want to trade it and you may want to sell covered calls, but you're not gonna buy it as a serious investor.
No, it's overpriced. I bought it at 180, Nick, and I thought that it was underpriced at that point.
I traded it and made money on it, and I'm sure Sasha did too. But the thing is, I can't keep that and go to sleep at night.
I sold NVIDIA not too long ago at around 275, and I was thinking that once it will go to 250 or maybe even 240, Jim, I think I discussed it with you.
Yeah, we did.
240 or even slightly below, I will jump in. It never happened.
Yes.
It never happened. So now when I started to see that the May earnings are approaching, the stock is refusing to go down, and it's slowly, every day, it's going higher and higher and higher. How long can you withstand that pressure? Not for long.
It's also near the top of its 52 or 2-year high low. It's on the top side. I mean, if I went through NVIDIA right now as a serious, hey, I'm going to put away and go on vacation. No, not right now. Not where it sits right now.
I couldn't agree more, Nick.
Yeah, it's not a good buy. Now, if you want to trade in it based on, hey, the earnings things are going to go crazy, and then you get the crazies like they did in AMD, but you get in and get out, like what Sasha does at the right time. So that's a different story.
But this is all modern investing is all about.
I know you get in and get out.
You sell and you buy. You have to trade. It's not a Warren
I'm
Buffett.
too lazy to work that
5
hard.
years ago, and you bought Coca-Cola and you
that
hold it for 750 years. There is no such thing anymore.
That destroys
Don't-
my lifestyle.
Don't try
Okay.
to hide that. Oh, I bought the best my stocks and the S&P 500 and this and that. No, there is no place to hide. You have to
No.
really understand and follow what you are doing and become a master of what you are doing. That's the
Yeah.
only way to survive. And if you can't afford it, you don't have time or whatever.
I don't have.
Mortgages, invest in mortgages.
When I was pushing the Nvidia, it was down your 120.
I think I bought it something like that and made some money on it on a trade, but like looking at today, because remember things
Yeah.
change, Jim. Looking at today as
Yeah,
a
yeah.
buy.
No.
No.
Well,
Well, I don't know.
interest rates-
I don't know what you're talking about because I didn't
It's not a
push
buy.
Nvidia at this price at all ever.
Are you going to buy it at this price?
No, I'm telling you, Nick. Just try to listen
We're
to
on
me
the
for a
same page.
second.
Oh,
I'm
okay.
not saying buy a Nvidia at this price. I wouldn't buy it, and I
Oh.
didn't buy it. When I was pushing it, it was under 200, and
Okay.
it was and at
Now,
that
let me
point,
tell
it was
you,
a
it
buy.
was under, Jim, it was under 200, it was over 200, with interest rates extremely high, approaching 5% or maybe even higher. Now, watch what's happened with NVIDIA in next 6 months when interest rate will start going lower. This,
I
in
hope.
my opinion, it's easily at least $500 a share stock. At least 500.
Whoa.
Maybe much higher, but 500,
Whoa.
no brainer.
I
Absolutely.
bought Novavax at
There's the bull.
$250. I bought Novavax based on momentum investing at $275. It's now below $5. So
But
There's some. Hey, listen,
how you-
Joanne, that's momentum
how
for
you-
you, baby.
how you-
You
how
got
you-
some momentum.
I made a lot of money off of Tesla
Reverse
stock too, by the
momentum.
way. But I sold it. I wish I had held it longer, but I bought it at 200 and I sold it at 400 because that was
Now-
enough for me.
Jim, look at the same Lululemon, which I bought at 310 and I sold it at
I did
360.
take a look at Lululemon.
Hold on, wait a sec. So again, I was looking at scenario that there is a huge gap that the company has to cover, come down maybe to 320, 25, and I would buy more shares. Never happened.
Yeah.
Never
Okay.
happened. Going higher and higher. And why? Because people keep buying the stupid Lululemon.
You know,
What do they do, Sasha?
it's a
what does
brand, man. You can't go to yoga
brand.
unless you
What
buy
does
Lululemon
Lululemon do?
outfits.
They're a yoga outfit
Well,
company.
and they're not just
Yoga,
that.
some other stuff. I don't
Oh
know.
yeah,
What is the
it's an
value?
apparel
what's
business.
the value of a name? What's the
Because they have
value
a
of a
whole
name?
line. Apparently, women are absolutely crazy about Lululemon.
And it's a brand for them. You just say Lululemon, and everybody knows what you're talking about. Everyone
Absolutely.
knows what you
You even
mean.
don't specify what exactly Lululemon stuff you're buying.
Lululemon
I'm buying
apparel.
Lululemon. Oh my God! Oh, how lucky you!
Yeah.
It's a status symbol. It's like like you're.
And it's what should I wear? One woman asks another woman, "What should I wear?" And they say Lululemon.
Yeah.
They
Right.
know what they're
Full
talking
stop.
about. It's a shorthand communication. And
Wow.
once you reach that stage, it's like saying, "I need me a copy of it. I'll Xerox it."
Yeah, right. Yeah.
You know,
Yeah.
you say
Or-
Xerox, everybody knows what you mean.
Are you,
So
have
you made it.
not,
You
not a
made it
facial
when
tissue,
you-
but Kleenex, right?
Yeah, exactly.
Yeah.
Like I don't even know what this is. I call it Kleenex. It's puffs. But it's Kleenex to me.
PE ratio of 55. Trading there, it's high over the last 5 years. But the good news is the revenues went up 30% year to year. That's pretty impressive. The revenue increase.
That's what I
Yeah.
would look at
Yeah.
with the last.
Yeah, I mean, and they had 2.7 billion in sales, and they're
That's pretty
valuing
impressive.
themselves at 47 billion. I mean, that's a good. I don't know. Another 30% jump in revenue could make a difference in that. But who knows? You really have to know what's going on in that company.
And
Because
that,
you're buying a brand. It's
You
like
are.
buying Gucci. How many people here own Gucci
or Prada. Yeah.
products or Prada products? I mean, men won't.
But this
buy
is
it.
more everyday people kind of thing.
Yeah.
Yeah,
know,
right.
you're not making a statement.
Everyday Gucci. Okay, you're buying
Yeah.
a brand
It's more, but it's got a bigger, broader.
base.
You know,
Yeah.
when you're buying something like Gucci, you're making a statement. I'm in a small percentile. When you're
Yeah,
buying-
but you really want to buy something with a 55 price earnings ratio. Come on.
Well, I know.
Yeah.
I know. That's reasonable. It's a good question to ask, Nick. Always.
Yeah.
When you're
I
investing.
mean, that would be another one. I
Always
can't
Good
sleep.
number to look at.
I'd trade it if it was on the low side, but I wouldn't sleep with it. Forget it.
Well, I was waiting for long. I don't have any Lululemon shares at the moment.
Lululemon shares.
But let's see, in 2 months from now, there will be another quarterly report. So
Yeah.
you cannot miss it. You will be at
Well, I mean, 30% increase in revenue, 2.7 billion in sales. That's
I would
pretty-
get interested in a company like Lululemon if for some reason it goes out, the apparel brand in general takes tanks. If everybody gets down on it and everybody sells it as a sector, then I'm starting to look at what's a good company that's underpriced right now. And Lululemon would be one of those that I would look at.
But it's a brand. The last thing you want to do is have the brand destroyed, and then you start thinking about investing in it.
Not the brand.
I mean,
The
all it
apparel
is the
stores,
brand.
say retail in general, just plummets, and everybody that's invested in any retail outlet is now selling.
Well,
Plummets.
I'll tell
And
you,
Lululemon is just one of those companies that gets tied down. It's like it's like when that happened to Nvidia. It's like what happened to the Taiwan Semiconductor. It's what happened to it in IBM at one point. And these are classic companies that are going to withstand the hard times. And when they're down, that's when you buy.
Yeah, well, as Sasha said, that's when you buy it on the high, it goes down. That's when you become a long-term investor.
Yeah, don't buy high.
That's what you told me, Sasha.
I
have a couple
never
stocks
buy high.
on
a long-term
for sure.
Because what a piece of trash.
The way
that
to
is.
become a long-term investor is to buy something. It's immediately in red. Actually, in my first 15 minutes of having take position, I know I'm going to win this position or not. So
Yeah.
if it's for first 15 minutes after you bought, it's in red, get out. You're losing position.
Yeah, and Milan keeps talking about the S&P 500. What about the S&P 100? In other words, why?
Or the 1,000.
No, I'm saying a less demographic group because in education, the top 100 colleges are really good, but as you spread out, they don't become as good. So the top 100 stocks may be really good, but as you go to 500, stock number 383 may just not be that great of a stock. Milan, have you looked at the S&P 100? In other words, one of the top 100.
The interesting thing about S&P 500 is traded in such large volumes that the bid-ask spread is very small. And the bid-ask spread is a cost that investors have, and many are not even aware of it. And so you want to increase the generous bid-ask spread out there. And so the bigger the company, the smaller the bid-ask spread. So that's one of the reasons why S&P 500 looks good. But yeah, for our meeting next time, I'll take a look at S&P 100.
Yeah.
Okay. Gentlemen, I would like to thank everybody for participating in today's program. We had a lot of fun. And next Wednesday, we'll get together and we'll learn about S&P 100.
Sasha, Nick, and Jim, you three have all been very supportive of our chess program, which is I wear this Serbian hat about, and I want to thank you for that.
Thank you.
Thank you.
No problem.
Bye-bye, everybody.
Bye-bye.
Bye.